No, because CMC last minute we couldn't able to use their room. I think they are having another last minute event, so they told us quite last minute as well. So we wanted to get no, cannot. That's why. Yeah, I think outside room someone is using. That's a problem. Yeah, we initially wanted to ask if City Index cannot, but so no. Yeah, so usually small class like this, small sharing session, we can actually do it in our own office. But if the crowd gets bigger, it's actually quite tough. Yeah. Actually, we have two more, but I think they are late. So usually we just start. Okay, I think I managed to get to know a little bit of you guys just now as well. You guys are trading but pretty new, right? So today's session, I'll be talking about a little bit about alpha play, about myself, and then of course we'll go into the market as well. We'll be sharing with you some of our ways in terms of we analyze the market, and hopefully you'll be able to learn something out of it. Right? Definitely won't be like in-depth kind of analysis. But the whole session, the agenda of this is to share with you little insights as to how we go through the market, right? Some of our thought process into it. And then we'll be also sharing with you definitely potential trades that you can monitor. It's not 100% going to be a winning guaranteed kind of trades, all right? But it's good that you can actually check out how we actually do it and such. Yeah, my speech might be a little bit blurred because of my ulcer in the tongue. It has recovered quite a bit, so I can actually talk better right now. Past few days, it's really bad. Okay, so just a quick disclaimer, because every time we share trade ideas, right, it's purely for educational, all right? So if you make money, it's good for you. You can keep the money, but if you want to buy me coffee, feel free to do that. But if you lose money, don't come back and find me, all right? Okay, so just a quick disclaimer. A little bit about myself, all right? I'm currently heading the trading department as well as coaching others, all right? And recently in 2013, end of 2013, I was featured in Channel News Asia as well as eToro, a social platform. And together with my partner over there, JT, we co-founded the mentorship program called the 4 Pillars FX. Right, so 4 Pillars, I'll elaborate a little bit about it later on, because we are going to use this methodology to share with you the market analysis for today itself. Alright, so if you want, you can actually follow me on Facebook, you can add me as friend, etc. as well. So run a YouTube channel. So this YouTube channel is more for educational basis, so you can actually find quite a bit of the different educational videos that I do and series. Alright, you can just find my nickname AKOM under YouTube, you should be able to find it. Alright, so a little bit about Alpha Play. So this is our website, alphaplay.com.sg. Basically, Alpha Play is an investment school, but we do run this school with a certain kind of philosophy towards investing and trading. Alright, and these are some of the things that we believe in. We believe in imparting simple strategies, right, that is easy to learn and yet applicable and profitable at the same time to everyone else. Alright, when we mean everyone else, we include students, even in tertiary education. Alright. We also believe in community, right? In building a cohesive community, because the journey towards trading and investing doesn't need to be alone. And we are doing it alone, it's going to be very tough. Right? And why we want a community is because we want the whole journey to be fun at the same time, right? Through a learning process. The last one, which we believe strongly, right, is to really showcase our result transparently. We are not here to claim that every year we can give you 100 and 200% return. But we want to be as realistic in terms of the financial market as well, right? So I think John also knows when we lose, we just show how we deal with losses, and then of course how we deal with money management, risk management as well. Right, at the end, we really want to show you that we practice what we preach. So today's setups, the market analysis, the entire top flow that we're going to share with you guys is actually exactly what we're going to do. All right, that means the trades that we share with you is exactly the trades that we are also monitoring and going to take. Alright, so let's jump into a little bit about 4 pillars. Just now I mentioned the methodology itself. So this is actually the overview of trading itself. Okay, so the whole idea here is it always starts with the foundation. Right, but I suppose when you guys always started with finding what is the strategy that you can adopt, what is the trading system that you can adopt. But you always miss out this element, which is about your foundation, building your psychology, building your mindset. which we believe that is really important, because if you don't establish this well, it's just like a house. If you don't have a strong foundation, anything you build on top of it eventually will collapse easily. Then once this is established, that's where we have the 4 pillars coming in. A lot of times when traders pick up skill sets, they always only focus on looking at chart, which is what we call technical analysis. I like to use the analogy of the house, because if you only build your entire house with 1 pillar, any slight wind that blows, all right, you actually collapse. That means your entire system is not stable enough. But sometimes traders then improve, all right? They realize that risk management is very important. Then they couple, right? And then I like to give the energy again, continue. If you build a house with 2 pillars, right, on a 2D plane, it looks good. But when you start to structure it in a 3D formation, right, your entire house is not stable. And that's where we start to build in fundamental and sentiment analysis. This entire thing to us is actually a very comprehensive and holistic way of trading strategies that you should approach towards FX. All right, so of course, if you trade stocks, this might not be fully relevant, but this is really on currency market, the FX market. Okay, so let me introduce a little bit, if you are not really familiar with what is fundamental, what is sentiment. This is a slide that I'll share with you. For you guys, any of you does stock investing? Stock investing? Yes. You do. All right, have you heard of this term called intrinsic value? Right. So imagine in terms of stock, intrinsic value is like the fair value for the particular company. So in fundamental analysis, the whole idea here, even for FX, is to actually find out what is the fair value of the currency pair itself. Okay, so the whole understanding of fundamental is taking into account of what is the economy of the country performing, right? Whether is it good or bad, as well as quantitative as well as qualitative, right? Meaning we also look into central banks. What are some of the major central banks that are speaking? Are they hawkish? Are they dovish? Are they bullish? Or are they bearish? Okay, sentiment analysis over here, the whole idea is basically reading on the tone and the feeling of the current market. Okay, so because market itself is made up by traders, and traders are actually human beings, all of us has emotions, all right? And when all of us actually trade the market itself would then have the tendency of having the emotions as well. All right, so sentiment analysis allow you to do that. Technical analysis, I believe everyone will be very familiar. Basically, you look at analyzing statistics data, which is your price chart, all right, presented on your charts, candlesticks, etc. Those are technical analysis. Very important is actually risk management. Okay, because a lot of times traders actually bust their account, losing their entire capital because they don't have proper risk management. So very quickly, some of the roles of fundamental is to actually give you a better understanding of the currency. Okay, when I mean better understanding is, for example, if you trade USD, how much do you actually understand the US economy? How much do you understand how the US dollar move? Fundamental analysis gives you that. It gives you a proper expectation of the market. Right, so for example, in terms of dollar, in context of US dollar, the whole discussion in terms of trading wise right now is whether the Fed, the US Federal, will increase interest rate in 2016 itself. Right, so it gives you a proper expectation. So meaning, when I mean expectation, if US Fed decide to increase rate, how will it affect the US dollar? And if they don't, how will it affect the US dollar? And of course, closer to what happened recently is Brexit. Right, I'm pretty sure that you guys are aware of it as well. Okay, and lastly, most important, it builds conviction in the direction bias. Right, meaning if you look at US dollar now this week, right, in terms of weekly time frame, are you going to have a bias towards buying dollar, or are you going to have a bias to selling dollar? Because this is very important, such that when you trade, you are very clear as to why you're actually buying or selling certain currencies. Okay. The roles of sentiment is basically talking about market risk environment. Any one of you heard of this term called risk on or risk off environment? Nope. You guys never heard of it. Okay, basically, in short, risk on, risk off is like, it's like a switch button, meaning when financial market is very uncertain. When I mean uncertain, is like, for example, when there's a war, when there's a financial crisis, for example, when Brexit happened, right? Maybe even things like, Italy bank might default, etc. Things like this. Those are uncertainty in the financial market. When there's uncertainty in the financial market, the environment itself is called risk off. Okay, risk off simply means that traders and investors, right, not only you guys, but big traders and big investors in terms of institutions level, they will become, their risk appetite will fall. Okay, when their risk appetite fall, meaning they are not willing to take the extra risk for the extra return. That means they are very conservative at that moment. And when they are very conservative, the money will flow from certain asset class to the other asset class. And that will definitely affect your currency market as well, right? And of course, the other way also is true, meaning when it's risk-on environment, traders and investors, in terms of institutions level, they are more okay or more willing to actually take extra risk for the extra return. And then capital will then flow towards a certain asset class, and that will affect the currency market. Okay, so we talk about risk on, risk off. So with sentiment analysis, you should know how to identify this kind of market environment, understanding how the market flow in various currencies, right? That helps you to make trading decisions better. And of course, with sentiment analysis, you understand the relationship between different markets as well. For example, when you talk about currencies, it's not a standalone thing. Okay, for example, if you know, let's say Aussie dollar is actually very closely related to China market, very closely correlate to the precious metal, right? And even commodities like oil is very closely related to Canadian dollar, right? So all these things is under sentiment. So if you do not understand it, sometimes you won't be able to trade and leverage on those opportunities or even avoid certain losses in the market itself. Okay, technical, which is very common, very familiar by a lot of traders. Basically, the role of technical is giving you a quick glance as to what is the historical trend. That means in the past, how has price moved? All right, and a lot of traders use it as a potential methodology, right, of how they identify their entries, put their stops, as well where they're going to exit with profits, etc. Okay, and technical analysis gives you the idea of precision, meaning exactly at this price I'm going to enter, exactly at this price I'm going to exit. Right? If you do not have technical analysis, you cannot do that. Right? And of course, it provides traders the ability to engage the market in various approaches. When I mean various approaches, meaning some traders prefer higher time frame, like daily time frame, higher H4 time frame. Some traders do shorter time frame, even like minute chart, 5 minute, 15 minutes. Right? And of course, various approaches here means some traders trade with different indicators like your MACD oscillator. Some traders trade with just naked chart, meaning price action. Okay, so this is the benefit and advantage of technical analysis because it suits to any kind of trader. You can definitely find a style within technical analysis as well. All right, and of course, this one when I talk about it is also flexibility in adopting. That means if you are working on a full-time job, then it also helps you in terms of looking at it in a higher time frame, etc. Okay, so this is the role of it. Role of risk management is super important. All right, a lot of traders start out without having proper risk management in terms of education in this topic. But risk management here covers two. One is money management, one is trade management. Money management basically is how much you risk, how you control your losses. Trade management is when you are in a trade, how do you control that? All right, meaning if your trade is in profit, how do you manage it effectively to protect your capital as well? Okay, and we believe that out of the four, this is the most important pillar, right? Fundamental, sentiment, technical, and risk management. This is the most important element because it has the ability to directly affect your P&L. Okay, because if you have been trading for some time, I think John also understands this. If you have been trading some time, you know that you do not need to have very high winning rate or success rate. It means your hit rate, all right, out of 10 trades, you do need to hit 7 trades to actually be profitable, right? But of course, as a trader, our aim is to hit as high as possible, right? But if you start off with proper risk management, with at least 50-50 win rate, you actually can already be profitable. Okay, so this is something that a lot of traders don't understand when they start up. And of course, the most important of risk management is at night, you can actually sleep with a peace of mind. All right, I know traders, some friends of mine who go into the night not being able to sleep, right, because they have trades running. And when this happens, it affects your next day as well. When it affects your state of mind, your performance will definitely be affected as well. And for those who are working, when you cannot sleep at night, you go tomorrow, go and report to work, affect your entire career, etc. So you do not want that. All right, so basically the whole idea of each of these four pillars give you a very defined role and why they are actually important. Okay, so if you want to find out more as in certain information, sometimes we share trade ideas as well. If you cannot come every week, do like our FB Facebook page. All right, that's where we post certain trades ideas, certain articles. But it's not going to be just about currency trading, but we are also looking into investing. That means investing in stocks and companies and equities, etc. Alright, so let me walk you through now into the market analysis segment itself. Alright, what you're seeing over here is what we call the Fundamental Strength Index. In short, we actually term it FSI. Okay, as the term suggests, Fundamental Strength Index, the term fundamental here suggests we are looking at the fundamental pillar of it. Okay, and the numbers you see here is basically an extraction, okay, of the economic data. So this analysis is a quantitative analysis of fundamental aspect. Meaning, economic indicators like your CPI, your employment rate, your NFP, those data, we actually combine them into an Excel model and we churn them out in such a way like this.
Where you get this kind of data?
Forex Factory, the calendar where you have all the events and all the data. No, so what we do is we plug all the data in, we put into an Excel model, and then we give it a certain weightage. Right, and then we churn out an index. Okay, so I'll walk you through what it means. So if you look at this, all right, 17 July, so we do this on a weekly basis. That means every Sunday, we will analyze this, and this will last us for 1 week. Okay, so 17 July is actually beginning of this week. The verdict, the FSI verdict here, you can see if it's a negative, means the economy as a whole is actually contracting. Right? If it's positive, you can see that economy overall is actually expansion. Okay, but that's not the key that we want to focus on when we do our analysis in terms of fundamental. But it's over here, weekly change, monthly change, and quarterly change. Okay, so you can see it's all in 1 point something. It's all in points format. Okay. So what it means is that on a weekly basis, that means compare right now to 7 days ago. The Aussie dollar, the Aussie economic data actually increased and improved by 1.42 points, meaning it's actually good for in terms of economic perspective of Aussie. It's actually good.
The minus 29 for Australia is not directly plucked from this.
It's not.
It's some calculation that you have done.
Yeah, correct. It's a accumulation of all the data that we collected. This one is since 7 years ago, 7 years, correct me if I'm wrong. 2009, 2010, so that's about 7 years now. Now, this one is based on weekly, monthly, and quarterly. So this one is actually more closer and more relevant to our trading. Okay, so what we want to share with you is weekly itself is more important. So what you can see is weekly itself, just by the economic data itself, you can see Aussie Kiwi has been improving for the past 7 days. Meaning the data release coming in is positive. All right, but Canadian last week was negative. Okay, China is positive. Okay, but China over here, we don't trade the Chinese yuan, but we know that China economy is closely correlated to Aussie, and Aussie is correlated to New Zealand. So that's why it's important to also track how the Chinese economy is performing. Okay, Japan, you can see is still weak, right? Meaning last week itself, the economic data that came out from Japan is actually negative, right? US is strong, Euro is weak, Pound is weak. Okay, but I want to share with you is that this data itself is just based on fundamental economic data. Okay, so we still have other pillars to take note of, right? But just I want to share with you that this is a fundamental economic basis.
You only look at all these index.
Correct. So when we trade, right, we actually want 3 of it all aligned. Meaning all 3 must align. Fundamental, sentiment, and then we must find a technical that we can enter. Yeah. So we don't say, okay, Aussie is strong, we buy Aussie straight away. It's not that way. All right, but we want to align fundamental, sentiment, and technical. Okay, but later I'll come back to this table when we want to combine all of it. Okay, but I just want to introduce to you how we do fundamental analysis. This is Power.
The minus 1.48, is it mainly due to Canada?
Yes.
Due to the oil country?
No, it's actually based on Canadian data. Meaning, if you go back last week, you can check last week Canadian data. They are negative data that has been used.
Oil country is one of them.
Yeah.
Sorry, no, oil you realize that it's actually US data. Yeah. So for any part of oil data, it's actually excluded from the Canadian FSI calculation.
Okay, correlation is not reflected here. Okay, it's a bit pure or economic.
So let's ask you a question. If let's say we don't use forex market, will it be Bloomberg will be better?
Oh, if you have access to Bloomberg, you have more comprehensive data, definitely. Yeah, but Bloomberg, you have to pay 1 year, I think about 20,000 subscription. But of course, if your office has Bloomberg, right, make full use of it.
1 month.
1 month, 20,000. Okay, maybe NUS got a cheaper. NUS pay about 1 year, about 20K. Yeah. So okay, now we understand fundamental. Just now I talk about sentiment. So sentiment analysis, how we do it is we look into something called the Commitment of Traders Report. Have you guys heard of it before? COT in short. Okay, COT basically is an informative extraction or information that's provided directly from the exchanges in the US. So it's actually, I would say, it's not something that can be manipulated in a way, right? Because what it tracks is all futures contracts. Now, all these futures contracts can be tracked by the US exchanges. Okay? So what is the role and the function of this analysis or this COT report? This is telling you what is the demand and supply of the particular futures. Okay? And this one, we are tracking not the demand and supply of retailers like you and me, okay? But we are tracking the demand and supply of big institutions, for example, your banks, etc., that trades for profit. Okay, but there are things, meaning having that in mind, right? After I share with you this, is not straight away, okay, you see demand and supply and then straight away buy and sell accordingly like this. Because the role of it is not to tell you where you can straight away enter, when you can enter, but it's telling you the strength of the trend itself. Is it still very sustainable or is it going to change soon? So let me walk you through. For example, Euro, right? I have all this here because this is going to be the focus for today's discussion.
Sorry, the issue is here also you get the data.
Oh, this one, getting the data, if you Google COT report, the first link itself is where you can get the information out already.
Okay.
So it's accessible online. Yeah. But I want to briefly walk you through how we read this. Net here simply means the summation of buy and sell. So if you see negative means sell position has more traders holding on to it. So straight away you know directly is overall there are more short positions than long position. Okay, long week to week, this is actually tracking the change from last week to this week. Okay, so when you're tracking the change, negative means there's a minus in position. Positive means there's an addition in the position. So you see long is minus, short is positive. What it means is long position, there are people or there are traders exiting their long position. There are traders entering new short positions. Okay, so what's telling you over here is overall is negative, meaning overall is short. Okay, it's bearish, and you see people exiting from long, people entering in short. So this information is telling you that the downtrend will be sustainable in Euro. This is Euro futures. Okay. Similarly, if you look at pound, okay, overall is still negative, long is negative, short is positive, meaning people are still interested in shorting pound. Okay, when I mean in people, I don't mean you and I again. I mean big institutions. Yes, this is for this week. So this again is a weekly data set. All right. So I want you to take note. Euro and pound is both sentiment-wise is negative. So I want you to align with fundamental as well, negative. Okay, so two things align in this aspect. Okay, and if I walk you through to the remaining 3 ones, that is going to be a focus of this week as well. Japanese yen, look at this. Long people exiting, short adding a lot. Look at the relative terms, all right? But take note that the overall position net here is still positive. Meaning overall in the Japanese futures market, traders in the buy position is still more than the short. But you can see it's changing already. So the trend might start to change in terms of Japanese yen. Okay, you look at Aussie, total is very positive. All right, you can see the increment in long positions outweigh the short one by so much. Okay, meaning people are buying, the interest of buying into Aussie has started to increase. And for Kiwi itself, the overall net change from negative to positive. And you can see long positions, people are adding into it. Short positions, people are exiting out of it. Okay, so I want you to align. This one overall is short, bearish for yen. strong for Aussie, strong for Kiwi. Right? So if you align this back to this one, you see weak yen, strong Aussie, strong Kiwi. Okay, so what I want to share with you is we don't only look at one, but you need to align fundamental, align sentiment, couple them together. Okay, and of course, we then from here we can filter off trades and decide which trades to look in terms of technical analysis. Okay, so before we straight away jump into technical analysis, we need to understand what is some of the key risk events that's taking place in this week. Okay, because all these events is going to move the market. Okay, your chart don't move the market. Your chart just track the movement of the market. All this news and fundamental moves the currency market. Okay, so this week focus, all right, we won't talk about what happened yesterday. We won't talk about what happened today really, because it's irrelevant. You won't be able to take opportunities of it. But let's focus on Wednesday, which is tomorrow. One of the key news that is very important for this week is actually your pound average earning index plus Clement count change. Anyone know what is the Clement count change? You all know what is NFP? Non-farm payroll, you know. What does it track? What does it track? NFP. Employment, right? Okay. It tracks employment. NFP is a name in the US, right? Clement count change is a name for UK, right? But basically it means the same thing. It's basically tracking employment. Okay. Average earning index in US is called the average hourly earnings. It's tracking inflation. All right, meaning on average, how much is the trade? How much is the people and the community in terms of the local people are earning? Right. So this tracks inflation. This track employment. Okay, these two data is very important: employment and inflation. So we know that our bias on pound is actually weak. Okay, even if you don't have fundamental, you don't have sentiment, you already know that with Brexit happening, pound itself is really weak. And if you read further into what the Bank of England statement actually released, they're also very clear that they tell you that they're going to go into easing. Easing means they're going to print money to stimulate the economy. All right, because when they exit, they get something in technical terms it's called liquidity crunch, meaning a lot of money will actually flow out from the country, and that's not good for the economy. All right, so what the central banks need to do is they need to then put back some money into the economy. And how they do it is they basically print money. Okay, when you print money, supply, demand, right? Supply increases, your prices will fall, right? And therefore the value of pound will actually fall. Okay, so having this in mind, this whole data is important. Why I say that is because if let's say it increase, the actual data released tomorrow is actually positive, meaning more than expected. If pound prices starts to go up, right, it presents you an opportunity to sell at a better price. Okay, so I want you to understand our top flow in analyzing the market. It's not straight away good data, I buy straight away. It's not, right? Because our approach here is we already understand what is the fundamental happening, what is the sentiment happening. If this is good data, it pushes price higher, it gives us a better opportunity to short pound. Okay, because we are riding at least few days to 1 week for our trade. Okay, so when we trade, some of our time frames we look at is H1 and H4. So our trade generally can last us a few days to at least a week. Okay, so that's why when price starts to go up because of good data like this, we see ourselves as having better opportunities to actually sell the pound. Okay, on Thursday itself, important thing is Euro minimum bid rate. This is where they're going to release their interest rate. Right, as well as press conference, meaning Mario Draghi will going to be going on stage and talk about what's the outlook, etc. This is important, and it's going to be the focus of this week itself. All right, because with Brexit, UK exiting Euro, there'll be a lot of countries then thinking, can I go independent? Right, and with the most recent one about Italy. Okay, there's some bank issues and concerns over there in the country itself. So the overall outlook of Eurozone is actually not healthy. Okay, so our expectation over here is Mario Draghi is going to be saying something very dovish, and when he says something dovish, it's going to impact the market negatively, meaning Euro will have the tendency to actually fall, meaning drop. All right. So all this also align with our fundamental of Euro, align with the sentiment of our Euro. Okay, so with all this, that's where then only we go into the chart and look at technical as to where we want to enter, where we want to get out, and where we put our stop loss. Okay, this one is actually pound dollar. All right, so it's GBP USD. All right, this one is H1 time frame. Basically, in terms of technical analysis, I'll just share with you very briefly the methodologies that we use. Right, we basically use 3 kinds of methodology. Okay, if you understand technical analysis, do you know how many kinds of market environment is there in terms of technical analysis? Don't know. John?
3.
Oh, okay, what's the 3?
Trending, up, down, sideways.
Oh, very good. You guys know that?
You know,
Yeah.
it just say it doesn't.
Uptrend, downtrend, sideways. Okay, so basically, that's the 3 market environment. But if you group them into 2 big categories, basically trending market, ranging market. Okay, so as a trader, as a technical analysis kind of trader, you need to understand you need to have 2 kinds of methodologies to tackle 2 kinds of market. Because if you only have one to tackle trend, when market range, you basically don't know what to do. But when market range, if you are a range kind of trader, then when market trend, you cannot capture on it. Okay, so you need to have 2 methodologies to do it. We have 3. One is to capture trend, one is to capture range. The other one is to capture counter trend. Meaning at the start, when the trend starts to change, that's called counter trend. Okay, so this setup that I want to share with you is a counter trend strategy. Okay, in short, we call it a divergence setup. Okay, why divergence is basically we just use the RSI, a very simple and default indicator that all MT4 will have. Okay, we use period 7. There's no secret behind like why period 7, why not 14, why not 21, etc. Basically, it doesn't really matter. The whole idea here is you need to understand the concept of divergence. So over here, you see price action is double top, right? And then over here, RSI forms a lower low. Here forms a higher high. Lower high, higher high. It forms a divergence. Right? Basic technical analysis. When this forms, we don't straight away enter. That's not our plan. Okay, because it can continue going higher. So what we want to do is we want to wait for price action to break it first, and then we wait for a retracement. Okay, so when price break it, it confirms that this is actually the top already. Okay, so what's next for us is we wait for a retracement towards the 61.8, and then that's where we're going to look to short the market. Okay, so in other words, other than just divergence, we use Fibonacci retracements as well. Okay, very simple. You pull Fibonacci from here to here. Our entry is at 618. Stop loss will be above 78.6. TP1 is over here. TP2 is over here. All right. So if I put it into exact price level, this is where we're going to enter stop loss and profit. Okay, but I do not want you to just go away today, with this in mind, but to pick up how we actually process from fundamental part to sentiment part, then eventually understand what is going to be the focus for this week. And then we move into technical analysis so that we know when we take this trade, we are very confident that we have done all our initial planning. Okay, doesn't mean that this trade is going to be 100%, 101% plus chop of winning strategy, winning trade, but it just gives you that confidence in entering a trade. Okay, because if you look at this, risk to reward is more than 1 is 2. All right, with proper risk management, it's going to help you profit over a period of time. The next one that we want to share with you is this one called Euro Canadian. All right. Again, if you focus on the fundamental, Euro is negative. Sentiment, yeah.
Sorry, just now for that trade, right?
Yeah.
That means that we are still waiting for the 61.8.
Yes, we are still waiting for it to go up. Yeah, it's a pending trade. Okay. Most of the time when we trade, it's all pending trades, meaning we don't actively sit in front of the computer and wait for the price to hit. We just set it there, and when price eventually goes up, then we enter the trade automatically with a pending order. Okay, our style of trading is not those that every day, US market open, we sit in front of the cop and then look for opportunity. But how we do it is on a weekend, we do all the analysis, and then on Monday, we key in all our pending orders, and then we let it run for the week itself. Okay, so our style of it is doing like this. Of course, it depends again, back to the foundation that I shared with you, whether you are this kind of traders or are you those kind that you need activity one. Meaning, if I ask you to be patient and trade like this, you cannot take it on. You have itchy fingers, you just open up your phone and you start trading. Then that also doesn't fit you, so you need to go and find out what's the strategy that fits your personality. Right? So that's why we say the foundation is the most important part of trading. All right. So this one I shared with you. If tomorrow news becomes positive, right? The ideal situation is it's going to push price higher, hit our entry, and then over the next few days, because the sentiment of pound is still bearish, over the next few days it starts to drop back and follow the trend itself. Right? So this is our approach when we start to analyze and trade the market. So this one is actually, if you look at it, why counter trend is because it is moving up in the trend, right? It forms a reversal kind of price action patterns, double top, and then we are then interested to capture the initial. Which one? Which one? No, this one starts from 11th of July. Today is about 20. Yeah, more than a week. Yeah, but it's actually not crucial because you are only focusing on here. Right? I always share with John when we do analysis, we focus from right to left, not from left to right, because over here you can exploit any opportunities already. It's done deal.
There will be a difference if you have a longer time frame.
No, if I chop it like this, it still be the same, right? You have a double top there.
So you're telling me you are interested in that?
Yeah, I'm interested on that, not here.
Yeah.
Okay, so this one is a counter trend. You can spot this kind of setup when it's trending in the past. Okay, so when it's ranging, you won't have this kind of setup. But when it's ranging, we adopt another one called advanced price action, which some of you guys will also be familiar with. It's called harmonic patterns. Okay, this only occur when market is in a range environment. Okay, so this methodology is used to tackle when market is ranging. Okay, so this is Euro Canadian. Again, if you focus back on fundamental, Euro is bearish. Okay, sentiment of Euro is bearish. Canadian, if you follow the fundamental, is actually negative as well. Right? But this one, why we are still taking it? Because our focus this week is bearish on Euro for Thursday. Okay, so we are expecting that Euro will be the main driver, meaning Euro will be the main focus on driving this particular pattern. Okay, so where we're going to enter, I'm not going to walk you through how to set up this pattern, because if you're interested, just go and Google. You probably can find some of it. I also have a YouTube video. If you want this on my channel, there's a 1 hour, no, less than that, about 45 minutes webinar. You can go and take a look at it. It's pretty comprehensive and introducing to you how to analyze harmonic patterns. Right, so my YouTube is free. Then you can go and analyze it. So this pair itself, where we're going to enter, will be at this level where the pattern completes. So we are still waiting for price to go higher. All right, and we will never know whether it's going to go up that high. But the whole idea is if it doesn't, then it's okay. All right, so we don't chase over a trade, but we wait for it to come to us. Right, so our entry is over here. Our stop loss is 1.550, which is slightly above this high. Right, so the whole idea here is if price breaks above that high, it basically breaks above that range already. So we are no longer interested. So we want to get out. So that's where our stop loss is. Okay, take profit 1 and 2. We are using Fibonacci again, 38.2 and 61.8. Right, but if you remember, part of the risk management pillar is that we talk about trade management as well. So sometimes we don't take TP1, TP2, we just trail our stop loss to right as far as we can. Okay, so this is another trade setups that I want to share with you. The last one for this week, all right, usually we share 3. The last one this week is again pound against Swiss franc. Okay. So you can see this was initially trending, and then what happens is market starts to range in this box, right? In this higher bound and lower bound. So when market range, that's where we get a lot of patterns again. Okay, so this pattern itself, similarly, we are waiting for price to go higher, right? So if you follow today pound news, it's actually positive. All right, so supposedly the positive news should push price higher, but if you check the chart, it didn't. Right, so again, because fundamental and sentiment for pound is still very bearish. Right, so a short-term kind of positive news like this won't help to push price. Right, so in other words, don't be impulsive in trading those news releases. Right, because fundamental analysis doesn't equivalent to trading news. Yeah, it's very different. Okay, so in terms of entry, entering will be around this level. Alright, stop loss is very similar. It's at the previous high. So if you can see if price goes higher and break this high, it basically breaks the entire range, and we are no longer interested in holding on to this trade. So you get out with a small loss. Right, take profit is over here 1 and 2. Basically, it's over this 38.2 Fibonacci and 61.
Actually, you use this pattern, it can go up to that high. How long it need to wait? How many candles?
Oh, this one, actually we don't count the candle. So, but how we do it is because our analysis is done on every week. That means if this trade we key in the pending order, if let's say on Friday the market closed, right, it's still not triggered, then next week we reassess again whether this trade is still viable. It means every weekend we erase all our analysis and redo it. Yeah. But for example, maybe Wednesday, Thursday, price drops before going up, right? So when price drops over here, basically this setup no longer valid. Then we will cancel it, right? But usually, even if you don't cancel it, if it drops, you won't hit it. It doesn't matter to you. All right. Any questions regarding this? All right. So basically, this is the top flow that we want to share with you. Any of you actively trading kind, or you want to share your experience with me, then we can walk through.
Anyhow trade.
Anyhow trade. define anyhow trade. How long have you been trading?
How long? Very tough question. I
Cannot
cannot remember.
remember. So quite.
It's a very experienced one.
No.
So very experienced.
Experience for a few months.
Okay, but do you have any like strategy or plan that you are following properly?
No.
You have now. What about yourself? You seems to understand FX quite a bit. So. No.
Yeah,
I think I understand for the past 2 months.
Past 2 months. That's good enough. You seems to understand what I'm sharing today, which is very
Because
good.
I want to look intelligent. I look intelligent, but actually I don't know what I'm talking about. Yeah.
Okay.
That's
Now, how many of you are trading live? Live means you not your demo account.
we are like.
well, like that's why we're here. Because we're skip life.
But how do you feel trading live? Is it your first time trading? I don't think it's your first time trading live already, right? No.
I've been trading for maybe like few months.
A few months. Okay.
For me, I don't.
So overall experience to you right now, is it positive or not positive? Positive returns, make money.
For me, after I know John, I'm positive.
Wow. So must treat him to some coffee already.
I know positive already.
Okay.
Short go. Short go.
What about you? What about yourself?
It was a good trade.
Okay. Okay lah. So the reason why I ask all this is I want to see whether you are aware of the psychology and emotions behind trading. Right, because a lot of times when people start off, right, when they make money, they become very happy, right? They have a tendency to then start being a little bit too confident, and then they start to say, "Wow, can lah, I go in bigger and bigger," and then after that, then they bust the entire account, right? So that's normally the cycle of trading, right? So just wanted you guys to see where you guys are to be more aware of it. No. Hopefully you don't go through that cycle lah with John, right?
Just for information, I'm sending my daughter to be trained.
Okay. Any questions you want to ask regarding this, or any specific market you want me to analyze and give you certain analysis? I can do that as well. Yeah, because we can do. Okay, John would know. I can do technical analysis pretty quick lah. So if you want, I can actually do live on as in not meaning live means right now I can do it analysis and share with you my thought process on it. Or if you want if you don't have then it's fine. You get me?
Yes.
Wow, such exotic pair you guys trade.
That is 1 day or 2 day trade one. News trade.
What's the
TRY. Try.
Then you are
Yeah. No.
50.
Yeah.
So it's walking over because no just
you trade that, but the spread itself is killing you, right? Not really.
No lah, no lah.
It's the first time I tried using it. Trading is balancing.
No.
This one all the key code, then we short first, then after that long, and go out.
Oh, because of the recent news. So you guys shorted it? No, as in you shorted that, so you buy USD. Oh yeah, you long this.
Because fail on the code.
Yeah, you make the zero something.
Okay, but what's your strategy? Maybe I can share with you some of the comments.
What strategy are you doing?
I don't know. So you're based on what you enter the trade, based on the news.
Based on what's that? What's that actually Then why is 2 lah?
1.7.
1.7.
Oh, drop that out.
Okay lah. Okay, I don't have knowledge in the fundamental aspect of Turkish lira. I don't have sentiment aspect of that as well, because I don't trade this kind of exotic pair, right? But I can give you advice, or not. I won't say advice, right? But I give you my point of view and see how you can take that recommendation to improve on your trading, right? If you know the other pair that is exotic against dollar, you guys know of it, NOK. Okay, heard of it? Okay, you heard of this term called but this counter called US index. Heard of it? US index. Yeah, I'll show you how it looks like. Okay. Why I want to mention this two things is US index is DXY. Right, over here DXY. So some of your brokers in terms of MT4 might have. If you don't have, you can go over to TradingView. Right, they have a lot of counters that you can search out for. Right, what I want to mention to you, DXY dollar index, is because when you trade US TRY and US NOK, right, they actually, other than the news thing, right, they actually track the US dollar very closely. Okay, because your USD index, your US dollar index, is actually made up by a basket of few currencies. Okay, so this, I'm not saying that if you only trade that two, then this is important. But if you're trading on any other currencies like your euro, dollar, pound dollar, dollar yen, it all helps, because if you look at this overall, currently you can see dollar for the near term is actually going up in terms of technical alone, right? It's going up, so you know that dollar overall is actually strengthening. Okay, so it helps you to give you an image that, okay, if you're buying on dollar or whatever pair it is, it's actually okay. Right, because you are aligned together with your dollar index. Okay, but in terms of this one, if you use it against, like, let's say euro yen or pound yen, that is not effective. Okay, this is purely on that. Right, so I want to share with you the correlation aspect. Right, if I show it to you. Okay, so you see, I map the USD index with the pair that you mentioned, right? US Turkish lira. You can see when dollar drops, your currency pair drops as well. Okay, especially this pair, which is your Turkish lira and your Norwegian krono, they track the USD index very closely. You can see when it drops, it drops. When it goes up, it goes up. When this goes up, this goes up. But the magnitude of change is different. But the direction is very similar, right? The closest two currency pairs that track USD index is actually this one plus your Norwegian krono. Okay, you have no idea about the exotic pair. I don't trade it, but I'm aware of it. Yeah, because I look into USD index, I know what makes the basket of it, what forms the basket in terms of it, right? If you compare it to euro dollar, right, it's not that effective. It's not that effective because you are looking at euro. Euro is also another big bulk of currencies, right? But you can see the relationship is inverse, and in terms of direction, it's also pretty clear cut. When it goes up, this comes down. When it comes down, this goes up. Okay, and you can see over here, it goes up, this one comes down. So it's pretty close in terms of the relationship. All right, so this is how it's important to also, when you trade that kind of exotic pair, it's good to look at USD index to see whether you are on the right direction overall. All right, because we don't have the fundamental access to it, we don't have the sentiment access to it. right? Even if you look at chart, technical analysis can apply on your stocks as well. Yeah, so some of the stocks we actually also use technical analysis. The rule of it is to pinpoint where we want to enter. For example, Tony talks about DoTech. All right, DoTech, we also, again, the approach is the same. Fundamental of the company, is it good? Is it a solid company? And then we go into technical analysis to find where we want to enter, align together, similar to currencies, FX.
So you do stocks also?
Yeah, we do stocks also. But JT, my partner, is more on stock investing. We don't trade stocks, we invest in stocks. Meaning it's more of a longer horizon, right? But for us, trading means a shorter time frame.
Okay. Which stock you are interested in?
Oh, that one's sensitive lah, but we will say which one we invested in, but the shortlisted one,
Which country?
few meaning US, Singapore mainly, Malaysia as well, Japan, Australia as well. Yeah, but quite a few lah. Apple.
Next week earnings and then how will you trade?
Okay, since we have some time, let's walk through a little bit of that. You want to share? Apple? Are you comfortable sharing Apple?
US are money change.
Okay, let me walk you through my analysis then. Okay, but he's a specialist in investing. So meaning, what I mean specialist, he invested for 7 years, 8 years. So my trading experience is about close to 4 plus 5 years. Right. So in terms of that, his investing is still better. Right. But let me show you our analysis, my personal opinion in that first. Okay.